Okay, guys, let's see what you have for the week. So, what I'm looking at Nasdaq, as you can see, we have the month is always gone, so we just have 2 days left, and we can see a very bearish close on the weekly. Okay, if we go on the daily, we can see though that Nasdaq didn't break lows yet, but to see a change of character from bullish to bearish, I need the breaks of this strong low first. Okay, after the break of this strong low, I need a retracement to go sell, maybe to catch a big sell-off from Nasdaq. That's what I'm expecting, because Nasdaq has been like going up for weeks without any retracement and leaving behind a lot of balance. Okay, we have this imbalance here, we have this other small imbalance here, or fair value gaps. Okay, so the markets need to go down to fill all these gaps, and that's what I'm expecting for Nasdaq. If not this week, at the beginning of the next month, also because we have the tension between Iran and the United States that's rising again. So I'm expecting like this big sell-off on Nasdaq. Okay, so I have this point of interest right here. Okay, this is a strong high on the 5 minutes time frame. We have this fair value gap that the markets, if on Monday or tomorrow the markets open in bearish gap around this zone, I want to see Nasdaq retracing to this strong high, because this is going to become a strong high as long as this low is broken. It didn't break yet because we don't see a closure below these lows. Okay, so I need the market to close below these lows, maybe with a gap, and then retrace to this area or an area of strong highs, to then continuing down. So that's what I'm looking for on Nasdaq. US 30, Dow Jones. If you go on the weekly, okay, we see a big rejection right here. So my bias for the next week is bearish too, because if tensions rise, Nasdaq go down, VIX go up, DXY go up, and Dow Jones and all the index goes down. Okay, so right here I have a Wyckoff distribution. Okay, if we go on the 1 hour time frame, same thing. I need a break of the previous strong low on a higher time frame. In this case, this H1 is perfect to be broken. So I need a break of these strong lows on H1 time frame. After this breakout, I want to see price retracing up, like in these zones. This is a strong high on the 5 minutes time frame, or we can trace an optimal trade entry from where the market stops from the beginning of the move, and be selling off this index around 0.7 or 0.618. This is a normal Fibonacci levels. And we have a target around these strong lows right here, or we also have a lot of fair value gaps to fill, okay, that needs to be filled. And I'm expecting Dow Jones to come to these levels, okay, and then we see like how the geopolitical context is going to end, because if the tension continues to rise, we can see like Dow Jones keeping going down to feel like maybe some fair value gaps on the weekly around this area, because it's going to be also a Fibonacci level for sure. If we trace our Fib from here, we can see this is 0.7 level, so this is a good level to go a long-term buy, okay, for a swing trade or a buy and hold, or people who like to invest, to buy some shares and just hold it. Then let's go to gold. Okay, so what we have on gold, we could see the previous week on Thursday, it's of course it's a reversion day, so it reversed a little bit to go retrace on the 50% Fibonacci levels, and it feel like some fair value gap that left behind. Now we are on a strong high on H1, but it also have some superior level that it could go up to fill these levels. But as tension with Iran and United States rose, I could expect gold open with a down gap around this area to probably go some buy, because all the bearish gaps filled up like on the next day or on the week that's coming. So I'm gonna look if gold opens with a bearish gap. I'm gonna look for some buys on strong lows, either some fair value gaps around this area. Okay, we have some fair value gaps to get filled. I tried on Friday to take these buys that didn't take me, it just went up. So nothing to do when price just goes up and don't retrace. So we can't do anything because buy high is never a good option. So let's go to DXY instead. DXY, we can see it has reached out a strong high level, but we have some liquidity above of a DS8 daily swing high. We have some daily swing highs liquidity. We have a 50% Fibonacci level that match with 8.4, if I remember well. Yeah, an 8.4 strong high. So I'm looking for sales in this area also because with geopolitical tension, we can see the XY open a bullish gap to fill this area or all these fair value gaps, okay, before seeing a retracement, because on the fundamental analysis, dollar is very, very strong because CPY keeps rising, and we see that the Fed is very, very hawkish at this moment. So let's go on Euro USD. We have a weekly close, very bearish, a daily close with a big rejection on Friday. So we can see is if the XY open on a bullish gap, the XY opens in a bearish gap, so around this area, or maybe also in this area, and retrace up to fill up this gap. And we can go short on the gap closure, okay? I have a target, a midterm or a short term, depends how strong the dollar index is going to be. I have this projection from Euro USD to 112, 111, okay? Because it's the last strong low on the daily time frame, because this is the last candle, that the last bearish candle before this big impulse that break these highs. So this is an order block, as we know, is a strong low. So I'm looking for USD to fill this strong low, maybe to then retrace up, and then we can see on the next month the news to have a better concept of macroeconomics. We have also Japanese yen. If you can see on JPY basket, we have a Japanese yen with a 1% interest rate after 30 years. It never happened. So it's the first time in 30 years that interest rate has been this high. So I'm actually looking for longs on the JPY. We can also see on the charts, though, that it didn't break any strong highs yet. Okay, so to have this bullish bias, I need JPY to break these highs, okay, then retrace, and we can go fill up some gaps that it left behind. We can see on this chart, on the JPY chart, but if we go on like Euro JPY or other pairs, we can see that we still have these gaps that JPY needs to fill. See, DBP didn't fill yet, CAD JPY didn't fill, CHF JPY didn't fill, so that's why my bias is still bullish, even if it didn't break any strong highs, but my bias is still bullish for JPY. So I'm looking for some areas of support. We can see here a Wyckoff accumulation. It just broke above, so I needed to keep moving above this accumulation, okay, before it goes up. Then what else? We have the CAD pairs. We could see a weekly close a little bearish, also because with tension rising, okay, we can see Brent going up, so oil is going up. If oil goes up, CAD pairs, I mean Canadian dollar, is very dependent on oil because it exports a lot of oil, so the economy of the Canadian, it depends on oil. So if you have an increase in oil price, we can see the Canadian dollar going up. If the Canadian dollar going up, so if tension rise on the Iran and United States war, we can see CAD strengthen. Okay, so if CAD strengthen, we can see Euro CAD retracing around these areas, the last 8.1 strong low. Either it can go to fill these 8.4 strong lows. That's the last support for this price. If not, it can go down to fill this 8-1 fair value gap, this 8-4 fair value gaps. Today goes up. Why I need why I have bearish bias for CAD? Because macroeconomically speaking, Canada is not doing well, so they have lower interest rates. The GDP is not doing well, so my macroeconomics bias for CAD is bearish. So I'm looking to buy on my all my strong lows, okay, in this pair, also GBP, CAD, because GBP is very strong in this moment, because GBP, they have very high interest rates, okay, around 3.75, and the salary keeps going up, inflation keeps going up, so we don't have a short-term expectation to the Bank of England to cut rates. So that's why GBP is still very strong. Either way, I'm looking to buy, not on this low, because this is not a strong low, because we can see that this low didn't break any high, okay? But I have this strong low that broke this previous high. So I'm looking to buy, maybe this week we can see a retracement on GBP CAD around this area, so then goes up. So this is what I'm looking for the next week. New Zealand dollar, I usually don't trade this pair because I don't like pretty much the price action, but I have this area to fill, okay, this daily fair value gap. So if tension rise, keep rising for the next month, we can see the euro New Zealand dollar going up around this area, and probably the world, like, they find some agreement for peace, blah blah blah. So we can see our retracement for the New Zealand dollar. For the Australian dollar instead, same thing. If dollar goes up, okay, these pairs goes down, because investor move their money from emergent currencies to safe haven currency. In this case, dollar wins. Okay, guys, that's it for today's breakdown. Now, if you want to follow my daily market insight setups and updates, make sure to join our Telegram community using the first link in the description. But if you're ready to take your trading to the next level and want to work one-on-one with me, you can apply for my mentorship program. Okay, you can DM me on Instagram. And either way, stop gambling, focus on the data, and I will see you in the next video. Trade safe.